Congrats, you got pre-approved. But wait, I have a couple questions for you. Did your lender give you your mortgage breakdown? Well, here's the deal. When you get pre-approved, usually most lenders are super excited. I'm excited, like everybody's excited. They give you your loan amount, but they don't go through the details, which is the most important part, right? So when you get a pre-approval, they're gonna give you your loan amount, which is basically your budget based on your financials, your credit. Let's just say that pre-approval came back for $500,000, great. But I want you to find out, hey, what is my mortgage breakdown, right? So what are my monthly payments gonna look like, including property taxes and home insurance? Why is that important? Because great, you got qualified for $500,000, but can you afford to pay that on a monthly basis? Do you feel comfortable, even if you qualified for it, do you feel comfortable with a mortgage of $500,000 a month? Maybe not, maybe your realistic budget is at the $450,000 range. We won't know that unless we get like the breakdown of the mortgage. So not only do I want you to get the mortgage breakdown, but I also want you to find out what your interest rate is. Sometimes lenders, they put points so they could get paid a little bit more. It's what I'm assuming happens in the back end. So what I like to do is always have, when I get clients come to me with a pre-approval, I like to have them go to get a second opinion, just to make sure that, first of all, there's no funny business going on. There's no points added to it where you're gonna pay additional fees. And you get to play them against each other and see who's giving you the best offer at the end. Pre-approval, fantastic, because that means you can go out there house hunting, but I want you to get the mortgage breakdown. And not only do you need the mortgage breakdown, but you need your cash to close. What's your cash to close? It's your down payment, right? So you have to give a down payment. It's called having skin in the game. You have to prove that, you're in it to win it. It's not good just putting a contract. And you need to have your closing costs. So usually what I tell my clients is whatever the purchase price is, multiply that by 3%, and that is basically your conservative number of what your closing cost. By the way, people, your down payment and your closing costs, you need to have that in the bank. If you're gonna pull it out of a 401k because your 401k offers you, this, I think they have like a $10,000 max that you can take out penalty free. Some 401ks, not all of them. You need to start working on that to put the money in the bank, because when time comes to put the down payment and you're at the closing table where you need to put your cash to close and you don't have it, we're gonna have a problem, right? So mortgage breakdown, cash to close, and down payment, people. If you have any questions, holla at your girl.
Hold up.